All right, friends. So welcome to this segment. We're going to look at internal control systems, and then we'll look at the accounting systems. It is nothing new. It's something you already know, especially with the internal control systems. I'm sure you might have studied it in the first year at the university. So I will assume you know the foundation so that we build upon it. Okay. So that's what I want to say. Let's kickstart quickly whilst I share my screen, and then we will move on. All right. So we're looking at accounting systems. Every organization has its own accounting system. So as part of our work as auditors, we must try as much as we can to understand the accounting system of the client in order to better provide a reasonable assurance service to them. So we want to understand the need for accounting record keeping. The main, we will explain the components of internal control system. You know this, you know some of these things. So we wouldn't dwell too much on this, okay? We wouldn't dwell so much time on the details of these internal control systems. We'll focus only, I think, on 3 areas which are usually examinable in any exams. So we'll look at basic principles of internal controls. We'll define internal controls within an accounting system. And realize that I have deepened one item, the SOAP/SPAM acronym for control procedures in the workplace. And I've put an asterisk there intentionally because what I want you to do there is to study it on your own. Okay, you study it on your own. So that place, the SOAP/SPAM, I expect you to study. You know it. Segregation of duties, authorization, approval, physical controls. You know them, management and those things, personnel, all those things. So I'm gonna leave that one area for you. I want to share something with you, but looks like I'm not finding the specifics. But just go to your text actually, and then you find the core text and you find these things there. And of course, if you know it from your first year, second year of study, you don't have to worry or head much over it, okay? What we want to do over here is to see how best we can pick some components of the SOAP/SPAM in testing these areas, the purchases and payables, revenues, and then receivables, payroll. Cash, we'll deal with cash in the second area, but we'll just touch on them, okay? So you should know this SOAP/SPAM. Like I said, you need to know them offhand. All right, so that is it. That is it. And then the very last one before I move on, consider the limitations of internal controls and in any danger and the danger of management override of those controls. You can even tell offhand what will happen in that area. Again, I leave that area for you to research into. Let's take some simple definitions. Okay, so internal control environment, what does it mean? So like the name sounds, it's an environment. It is the atmosphere, the particular settings within which these internal controls exist. And it has to do with the client's system, client's operating environment, okay? So within it, we can get the internal controls, we can get the internal control activities, and we can get internal control procedures, okay? Test of controls. In the past, we used to call it compliance test. Today, we call it test of control. So you would have heard over and over, we say test the controls. If controls are effective, you do little or no substantive testing. But if controls are not effective or they are overridden, then you have to do a lot of substantive testing. It's the same thing we're talking about over here. We are actually testing the internal controls. So when we hear test of controls, we're talking of testing the internal controls and the procedures. Substantive testing, that is the detailed testing of the transactions and the balances. We conduct analytical review. Those are where the quantitative analysis comes in. Sometimes we do some simple statistical analysis to check whether the figures actually generated from the control systems, from the accounting systems are correct. Okay. Under definitions, audit evidence is the evidence we auditors gather, which forms the basis of our opinion. So management will give us those evidence. We need to call for it. We need to vouch it, validate it. Sometimes we get this evidence from external parties. And we've known in the past that evidence independently gathered by the auditor is far more reliable than what the client provides to them. Okay. Audit risk, the risk that we, the auditors, will give an incorrect or misleading opinion as to whether the financial statements represent a true and fair view. So, and it is a function of three things. You know it in the past, we've said it. It's a function of what? The detection risk, and the control risk, and the inherent risk. And we said that the inherent risk and the control risk amount to the risk of material misstatement. Okay. So it is either a function of the risk of material misstatement and detection risk, or it is a function of control, inherent, and then detection risk. All right. Now we talk of assertions. You will hear the completeness, existence, rights and obligations, accuracy. You remember them. So these assertions are those statements which are made, usually provided by management, about the validity and recording of transactions, the balances reported, any disclosures made. And these assertions are what we will vouch to ascertain or to confirm whether what management is claiming about those transactions are correct or not, are true or false. Accounting systems. Every organization has its own accounting systems. So it is basically the foundation or the boundaries within which we produce our financial statements. So it is again like an operating environment. It's a system, okay, from which we analyze our financials, process them, and produce and present them. Now, every organization has its own accounting systems, regardless of whether the company is big or small. And the idea here is that we have a system to control the business finances, the flow of the finances. This system helps us to forecast and to budget activities and our finances for the future. And it helps us to maintain daily records of all transactions, including what? Receivables and payables, cash, payroll, name them. It also helps us to safeguard the assets of the company, to ensure that we record the assets, we process them, somebody doesn't just steal or pilfer these assets. We want to safeguard the resources of the organization, the physical assets of the company. Again, the accounting systems helps us to also prepare our financial statements accurately in line with the required accounting frameworks or reporting frameworks. It also helps us to comply with any mandatory regulations or statutes like the Companies Act 2006 or any listing requirements like a compliance with the UK Corporate Governance Code 2018. And it also helps us, or the accounting system actually helps in record keeping for pay-as-you-earn deductions. Payroll comes in here, you see. National insurance contribution, VAT, any statutory requirements. The accounting systems helps us to comply with those. Let's move on. Internal controls. You would have realized, let me just change one thing here before we move on. You would have realized from your past study, okay, when some will say 4, but I think we'll have to stick with the 5, okay. You would have realized from your past study on internal controls, based on the COSO framework. You remember the COSO framework, the Committee of Sponsoring Organizations, the popular, if you don't remember the COSO framework, you will remember the Tradeway Commission's report. You know this. We are not going back into those stories. So the Tradeway Commission report, because it was chaired by James C. Tradeway on the Committee of Sponsoring Organizations, COSO, they came up with 5 components of the internal control. Okay, 5 components, 5 key components. Some say 4, where they omit the information communication, but now you cannot omit information communication. It used to be 4, it's now 5. And you can see I have highlighted the key items. So if for nothing at all, remember the crime acronym. You remember the SOAP spam, and you should remember the crime. Crime gives us the 5 components. So C talks of the control environment. We know that. We know what it means. It is simply the atmosphere within which the control system. We saw the definition, okay? And then we also talk of the risk assessment processes. We'll look at it. That's where we need. When we go to the next segment on this particular unit, you will see how we have to deal with the risk assessment. But we'll look at it also here. We'll start from here as well. Then the information and communication, very key. We need to communicate clearly through the right channels and ensure that it is well understood. The systems can actually speak to each other, okay? Then monitoring these controls, how effective they are, can they help us effectively achieve our objectives? And then what are the existing control activities? So we remember this COSO framework, the 5 components from the Treadwell Commission's report. So within our control environment, the culture of the organization exists, and this is where we expect management to buy into the control environment. They shouldn't override these controls. If they override it, then of course, what you are going to do is that you, the management, are promoting the culture of fraud. Let me put it that way. Once controls break down, fraud will be perpetrated. There will be significant misstatements of material misstatements within the financial statements, which would cause a lot of havoc or misleading information or even risk to the shareholders or to any stakeholder who relies on your reports. Auditors should be able to tell. Now, in our risk management processes on these controls, we have to check whether they are working well. We'll consider the control activities in place, what procedures are being used. We monitor and see whether it works. Now, our work as auditors, we want to focus on the last segment, monitoring the procedures and monitoring these controls. So we will just focus our attention on the very last block, okay, on the right. Under ISA 315, you remember ISA 315 has been our friend all this while, where we try to understand the entity and then the environment in which it operates. It helps us to identify and ascertain any risk of material misstatements which may occur. So we better understand the client's internal systems and controls, and helps us to plan our audit effectively. Here, we must understand controls which are in place. We should identify any possible misstatements. What factors could affect the risk of potential misstatements? In which case, it will help us to design our audit, the extent of work we are supposed to do, the timing of procedures. And the idea is that we want to get corroborative evidence, okay, so that our work will actually not to corroborate what the system is misleading us to do, but to corroborate something differently, from our independent work. But the system is, of course, robust and is good and it is giving us positive. Our work should also corroborate what the system is telling us, not to contradict what the system is telling us. Now let's run down on 3 areas. Purchases goes with payables, revenues, and we'll take payroll. We'll leave the cash, but we'll consider 1 or 2 items in cash. All of these items has to do with cash in one way or the other. So we're looking at the control objectives here under purchases. And purchases procurement is a very risky area. That's where frauds occur. You can see people, senior management or even procurement officers conniving with vendors to inflate bills or purchases, or that is where the fraud occurs. Okay, that's where procurement is a very risky, highly risky area, and it is an area, if you are assigned to work on in your field audit, you must be very careful. The control objectives under purchases would ensure all purchases of goods are authorized by the right person. Okay, you should also ensure necessary goods are procured. You don't go buy some fake items under the name of a genuine item, just to cause some financial loss to the company. We should also ensure, the objective is to ensure that value is received for any liabilities we've incurred, especially in areas where we purchase on credit. So, for sure, we have to pay this vendor at one point in time. So the value we have received and the liability which has been created on the other side, do they match? All expenditures must be included in the accounting records. It's one of the objectives of purchases control systems. And then one other control is to ensure that expenditures are included in the right accounting period and they are stated accurately. You don't misstate them. Let's look at a couple of the SOAP spam controls which we can apply under purchases. Authorization and approval controls. Requisition notes must be authorized. So if the accounting department wants to buy laptops, they made a requisition, they initiated it, it must be authorized. It must actually be spooled from the budget which has been prepared. There should be authority limits. Nobody at all should get up and authorize the purchase of any item above a certain amount. So that's how we have the approval limit thresholds. There are different names people give to it, but it's a payment threshold or authorization threshold. So financial director can approve up to maybe 10,000. Anything above 10,000 should be referred to the board to approve. So major items should be approved or authorized by the board. We can vouch this from the minutes. Goods should be checked for the quantity and the quality. So we need a goods received notes, GRNs, should be raised to ensure that quantities, quality, the numbers we are paying for are the same, okay? Any invoices issued should be signed and approved. Any invoices from the client, from the vendor, actually, from the vendor should be approved. Now, let's look at physical controls over purchases. All orders we receive should be recorded on official documents. Copy orders should be retained for follow-up. We need originals. Non-carbon copies is okay, usually for now. We don't want carbon copies. People can cook up the books. Now, defined goods invoice centers should be ideal areas for receipt of goods. So we should have a defined goods invoice centers. This also applies to the sales, the revenue. We look at that. So sometimes we purchase the items, we think these items are inferior, we have to return them. So let's create a designated area, physical control, where we have to return the items, and then later we ship them to the vendor. You would agree with me, sometimes we buy items from Amazon, it's poor quality, you want to return them. You have to keep the item in a safe area and return them. Same applies in the workplace. Purchases invoice should also be stamped with the approved grade and sequentially pre-numbered. So make sure that any invoices, even the GRNs and then the requisitions should be sequentially pre-numbered so that we can know how we can trace them. Don't just jam them up. Arithmetic procedures over purchases, we should check invoices against orders and GRNs. That's what you may have heard of the three-way match. The order, what we received, and the invoices which has been issued by the client. So that we know that we ordered 10, we received 10, we are paying for 10 items. Goods we have returned to the client, to the vendor, should actually come with a credit note, because if he's billing me for 20,000 and I'm returning 5,000, that should give me a credit note of 5,000 so that I know that my bill will now be 15,000, not 20,000. Check invoice calculations. Don't take things for granted. Check the VAT calculations. Check the quantity times the rate which has been provided to you, okay? Segregation. The nominal ledger or general ledger coding should be checked independently by somebody. The one who, if it is not an automated system and somebody has to be coding it, putting in the ledger folios, a third party independently should check that one. Payables ledger control should be kept by persons who are independent from the receiving of the goods. So I shouldn't be in the warehouse receiving the goods and at the same time I prepare the ledger. No. The one who receives it should be different from the one who independently prepares the ledger and reconciles the ledger. Now, payables control account should be maintained and checked independently. So within the control account, we check discounts we got from the supplier, how much we've paid, how much we are owing, okay. Organization controls also looks at reorder levels and quantities should be preset, okay, not to be tampered with. Identified goods invoice centers, like I said, should be there. So these organization controls, and GRNs should be checked against purchase order. Two parts of the three-way match, okay, against purchase order. Let's take revenues. What are control objectives over revenues? The sales, the turnover, the income. We want to be sure that sales to customers are made in accordance with company's objectives. If we cannot sell to a customer or give a credit to a customer above 10,000, then we shouldn't sell items to a customer on credit for 15,000. Company's objectives, company's policies, we want to be sure that any sales we make are in line with the company's policies. Customer orders should be authorized. That's one other objective, that any orders we receive from customers are authorized, they are controlled, they are recorded, and we quickly respond to the customer's needs fully and promptly. Goods and services supplied to the customer, we then invoice, we send him an invoice on the basis that we sold to them on credit. Okay, they didn't pay all or they didn't pay at all. Goods return and claims are recorded to determine any liability. So if we have sold to the same story like the purchases, we sold to the customer returns portion, we should know that we need to refund some portion, some money to the customer. That is a liability we owe. So we determine that liability. Another control objective is to ensure that all sales have been recorded accurately within the specified accounting period. Okay. All sales are paid for, and we want to minimize bad debts occurring. And any returns, we manage them. Okay, so these are some of the controls, or most of the control objectives. Let's look at some control activities over revenues. For sales orders we received, do some arithmetic controls there where we check numerical sequence of orders. Okay, we'll come to the arithmetic. So look at the order. Is it sequentially pre-numbered or haphazardly jumped up? Check for approval signatures. Who is signing off for that credit sales to the customer? Is it a credit controller, or there's no sale on it? Or is it a sales clerk who signs off? Keep a copy of any order we give to the customer. Send a copy of the dispatch note to them. Today, if it is a soft copy you buy on Amazon, you can always download your order or your invoice. You can always download your invoice online. Now, sales should be dispatched with a copy of the dispatch notes. Normally, if you buy hard copy of books, it comes with a copy of your dispatch note to tell you that it has been dispatched. Usually, you want to check customer's signature as proof of delivery. Today, you buy some expensive items online, especially if you buy Apple products. They don't just deliver it to you. They expect you to provide them with some 6-digit code, Amazon usually, or you sign for it. So the customer who receives must sign for it, else you will not be given the items you've ordered. Check numerical sequencing of the delivery notes so it comes in. So numerical pre-numbering or sequencing of the orders, of the GRN, of the delivery notes, of the invoices is very important. It helps us to trace one after the other, so that if any number is missing, we ask, why is this order number or invoice number missing? Who has taken it out? And usually, if you are using the cards, the computer-aided accounting techniques, the tools, the audit softwares, they'll flag out when there are items which are not sequentially pre-numbered. Then you have to trace why. Okay. We also check dispatch notes, details to the copy of the sales, and form of three-way match. So the dispatch note to the sales invoice and even to the order which was placed by the customer. So it's like doing a three-way match on the other side for the customer. Purchases on our own side, we do the three-way match. So other control activities, sales invoice, once we send the invoice to the customer, do some calculation, arithmetic, independently check the calculations. Make sure you have agreed the details to the customer's order and send a copy of these details to the customer dispatch notes. Okay, check numerical sequencing again of the invoicing, quite important. Sales invoices should then be listed in the sales journal or sales day book, okay, bookkeeping. And all others must be in the day book, put in folios, necessary folios to trace to the customer, okay, and also plug in processing controls. If there are batches which has been dispatched to sales to some customers, use batch totals, okay. Check again, numerical sequence, pre-numbered of invoices, quite important, and individual sales journals entries will then be posted to the receivable ledger, reconcile it to the accounts, okay, and make sure they jive with what was ordered or what is on file. On monthly basis, control activities for sales could be generated. We're coming to a close soon, don't worry. Monthly total of sales journal posted to the control account. So within the control account, you know what we'll find over there. We could see sales that we have cash that we have received from customers, any discounts we give to them, any returns they have brought in. We close it off every month. We reconcile this and jive it to the ledgers, to the ledger balances or the debtors ledger balances at the end of the day. We also have to send independent notes, okay, statements, some form of confirmation to the customers. I'm talking from the dimensions or from the perspectives of the company, so that we have to send independent statements or monthly statements to the customers. Then they will tell us, oh, the balance is correct. No, I think I disagree with these balances because I paid you some cash, I sent in some checks. You have to check and change this figure. So these controls must exist. And at the end of the day, we post the final figure in the receivables ledger and then reconcile it and show that the sales and then the receivables jive. Any cash we have received plus any sales receivable outstanding should jive with the total revenue we have on hand. Payroll. This part of our world, I can say payroll is not too risky. It's not too risky an area, but from the developing world's perspective, this is an area, if you get collusion and the company systems are not strong enough, their control environment is not strong enough, fraud will be perpetrated there. I'll cite two examples. For example, I got a job in a good place, not in this part of the world, in Africa. Very good job. And then when I got in, surveyed the area, I didn't leave my former workplace. I came in, surveyed the area 2 days, and I said, no, I can't stay in this workplace. So I went back to my old workplace. And I had written to this new employer that, sorry, for one or two things, I cannot come. So I turned down the offer. 1 month later, I got salary from the new employer that I spent only 2 days with. And I was surprised. So I called the finance director that, listen, I didn't work, but this is the money which has hit my account. Can you please order the bank to return that? In fact, I went to the bank and I told the bank, no, can you return it back to the company? And the bank said, no, they cannot take money from my account and return it to somebody. I can take the company's bank details and then I can order a transfer. I tried calling the school. I almost gave you the name of the company. I tried calling this organization and telling them, listen, can you give me your bank details so that I can pay back? And forth and back, they were just, it was a mess. So later, I had to go to the financial controller, wrote a terrible email and made them understand they have a very weak control system. At the end of the day, due to the forth and back, I just had to close my account and transfer that money back to the company. I think I got their bank details and transferred it back. So the control objectives under payroll is to ensure that we pay the right people, we pay them for work done, whatever is being put into the system has been authorized to work with us to take that pay, okay, and that payroll costs are complete, they are accurately recorded in the financial statements. And we also want to ensure that all statutory deductions like income tax, NI, any statutory deductions are calculated and paid on time. Those are the payroll objectives. Some SOAP spam control procedures. Let's look at segregation. the wages and salaries department should be separate from receipts or payment functions. So within the same, we don't give the same functions to one person. We should get a payroll accountant different from the receipts and payment functions. It should be quite separate. Else we'll end up and inducing somebody to commit fraud. Okay. Duties of wages staff should be rotated every year. Don't put the same person over there on one person who processes the director's pay and another person processing the lower staff pay. We should rotate them. Control of access to the master file records, that should be kept very secret somewhere with maybe the financial controller who has no control over or who has no functions in payroll activities. Maybe he only signs off the monthly payroll budget, okay, but other people will take care of that. And again, no one person should be able to input or add employees into the system, remove employees, change tax codes, key in NI rates. No, not one person. No one person should do that. I was in one organization, and I saw that thing happening. So I went to the senior leadership. I said, no, this is a weakness. We cannot allow one person to add an employee, to delete an employee from the system, and this same person processes payroll every month. No, it's not right. This person it's a woman. I said, this woman can key in anyone at all, as if the person is an employee, and be paying the person when the person is not actually an employee, because she can delete and add and amend and update. They didn't listen to me. Actually, when I left the organization, just 2 months, they called me that the woman had perpetrated a terrible crime. All the pension monies in the system, this woman had created a fictitious employee on the system and was actually remitting this person. It was a terrible scenario, not knowing that the husband was in the US and she was actually using the staff payroll, not payroll, pension payments to finance the husband in the US. So the husband was there not working, and the woman was in Africa and actually funding the husband in US. Terrible, with people's pension money. So that's it. Segregation of duties, personnel is a very serious control system we have to consider in our payroll system. So supervision of clock cards, who comes at what time, when does the person come in, when does the person leave? Do we pay the person for work done within that hour, or the person is short-changing us? Okay. Authorization and approval control, so I'll run through quickly. I'm looking at my time. Written authorizations to employ or dismiss any employee or to change pay rates, authorization for overtime, an independent official check on payroll and being signed. Nowadays, we don't pay people much in cash, but if somebody takes money in cash, the person must sign for it. Okay. Any credit transfer should carry 2 signatures. So sometimes also you find some employees taking advanced salary. They take some of their salary ahead of time. It should be countersigned. The departmental leader should approve it, and whoever is paying should also approve it. That, oh, Richard is taking 2 months' salary, so that it will be netted off against his other salaries, and it should have counter signatures. Arithmetic and accuracy, simple calculation of the payroll should be checked. Look at whether VAT rates are correct, tax codes and NIs. Control accounts should be maintained to ensure that it works well. Personnel, again, personnel controls here under payroll looks like segregation of duties. And management controls looks at overall checking to ensure there are no major discrepancies. Are you hiring somebody who has not been approved on the budget, or this was already considered in the budget? Analytical review of payroll costs, very important. Integrate it to the costing system. And finally, let's look at cash received. Controls over cash. When we receive cash from the post, it should be opened by 2 people. One person shouldn't. By the post, the mail should be opened by 2 people, so that we can check on each other. Unless these 2 guys decide to collude, then there's nothing we can do. Incoming checks to be recorded and page should be signed off. Today, any checks that come in, we log it. There's always a logbook to keep track of these checks, and they should actually be maintained outside the cashier's department. But so that the cashier shouldn't be the same person receiving the checks, we want to avoid this. So segregation of duties comes in. Controls over cash received by sales force. So somebody goes out to do sales and marketing, brings in the cash. There should be duplicate receipts so that he has reported 10,000. We also report 10,000. We keep a receipt. We give him a copy of that to keep for his records. The day that things will not jive, we can hold him to account. Controls over cash collection, there should be duplicate receipt. Like I said, internal tail rolls. You know what the tail rolls are. I cannot just go to anywhere and pick a tail roll and fix it, and then I issue the tail rolls. After that, I can take the tail roll and throw it away. No. It should be designated. Somebody should authorize you to pick up the tail rolls. Okay. Electronic point of sales. You know what happens nowadays? We just go, you buy, you flash your card, and the system will capture it. That's why we need IT controls, IT audits to vouch some of this revenue, some form of revenue assurance. Cash collections at retail points, sales with rank invisible amount to the customer to be seen. Look at precise pricing. Okay, it forces the operator to give change. Today, because of COVID, this precise fixing of prices have changed. You pick the bus and you don't take care. You put in £5 and it is $4.20. You don't get change. Watch for any voice, any sales, no sales, and then flag them out. I leave the rest for you. From the 10 Bull report, you remember the corporate governance evolution, the history. On the 10 Bull report, it tells us that internal control systems are very important. It helps the company achieve its resources, its objectives. And one of the key items is that if we have a sound internal control systems, it safeguards the shareholders' investments and the company's assets. It tells us that when we have a good and sound internal control systems, effectively we are able to achieve our objectives, and we're also able to comply with all relevant laws and regulations. And what it also tells us is that if we have effective financial controls, like maintaining a proper accounting system and internal control system, what happens is that we reduce unnecessary financial risk, and then financial statement within our system, when we produce it, will be reliable. People can always say, our audit will end up giving us clean sheets. Let me put it that way. Okay, so, and helps us to also prevent fraud. I leave the rest more of appendices, okay, control activities on purchases with some kind of flow charts, and then payroll, some kind of flow chart. You can use Microsoft Visio to prepare all of this. Quite easy to do this. Revenue systems, and then we'll look at further questions. So look at the case study on Sky and Tix, and also consider the ACCA pass exams on page 127 to 128. It is always important, friends, let me end on this note. It is always important for you to be able to validate internal control systems in an organization. We always test controls. So you most likely get an examination question where a short scenario is given, maybe purchases or sales or payroll, and we tell you that what are the audit procedures you will undertake in terms of internal controls, and tell us the consequences, how you do it. If you don't do it, you'll find something quite interesting. We'll treat an example in our class as part of our workshop tutorial, so you'll be fine. Okay, so I end here, friends, and I will see you when I see you. Bye for now.